What's going on, everybody? Zack Brittain here and Matt Phipps back on the Canadian Real Estate channel with another awesome video. Today we are going through a multi-unit in downtown Kitchener East Ward that we're going to BRRRR.
We're going to walk you through exactly what we did with the renovations on this one. We'll walk you through the numbers and we'll show you exactly how we plan on making money on this one. Let's go check it out.
Awesome. Now that we're at the property, we're here in the main unit. This property features two two-bedroom units. Two-bedroom unit that we're in right now is on the main floor. It's got an unfinished basement, access to the mechanical rooms, bathroom off the side, kitchen off the back that we relatively left unchanged. Upstairs, virtually the exact same two-bedroom unit, kitchen, bathroom, laundry closet, and then a one-bedroom unit off the back of the garage. We also have a double attached garage and parking for 6 off the side. Fantastic features to have, especially when you're in downtown, when storage and parking comes at a premium.
Second, you've heard it before, you'll hear it again, location, location, location. We are located in East Ward here in Kitchener, which is one of the top neighborhoods. I personally really love this neighborhood. I know Zach does as well.
Sucker for it. It's a nice spot.
There's some beautiful, beautiful areas. Not just all multi-units. You've got a good mix in here. We're right close to downtown. We're minutes from the expressway. Literally close to everything you need. A really big selling point for us for this one.
Absolutely.
Another big one for us is the opportunity for forced appreciation with this one. We were able to get it vacant. So this was an owner-occupied unit. Actually, the unit we're in now was the owner-occupied unit.
For a long while, too.
For a long while. So they were renting the other units before, but I think over the past like 2-3 years,
they let them turn over.
They let them turn over. They just didn't want to deal with tenants, I guess. So they were sitting vacant. So we were able to get this place totally vacant, which for most of you know, that's awesome for a triplex. Gives us the ability to A, come in here, update the units to our standard, and B, we're able to then get current market rents, which is going to drive the appreciation, okay? Once you get into these multi-units, a lot of the value is driven from how much income it can produce. So being able to take a property from what it's making down here to update it and then get rents closer to market rent, or in our case, we plan on pushing that even more and trying to get the most we absolutely can. We're gonna drive the appreciation on that one, and we love that. We're gonna break down the numbers and show you everything there, but that obviously gives us the opportunity to BRRRR it.
Opportunity and options, baby. And some additional stuff that we're going to talk about is a bonus for this project. Not only, like you mentioned, owner occupied, get all our units vacant, it's a 3-unit building, so we can get Res A financing. That's a big advantage compared to going to something a little bit larger for some of the projects we're looking at right now. Obviously something we consider for a project like this. Furthermore, we got extra storage, extra parking, and basement space that's unutilized, as well as quite a large lot. So there's an opportunity for us to add more parking, add more storage, or potentially add maybe an Airbnb or additional utilization of the empty space that's downstairs. We can reconfigure some of the mechanical systems and we can have a decent opening space right there, potentially Airbnb, additional storage, laundry, other features that either current tenants are going to pay extra for or opportunities to generate additional cash flow on a property after the BRRRR has been completed. We like options, we like upside, and these are all the main reasons why we love this project. Awesome, guys. Now for the BRRRR strategy, a great way to make sure that your numbers check out is to get a really good understanding of what your renovation budget's going to be. That is a very key component when you're BRRRRing a property. So we're going to go through what we're doing for each unit. For the first unit, the one we're in right now, the big part that we had to do was just the bathroom. Bathroom was dated, had to go. Gutted it, completely replaced it, tiled shower, nice new vanity, new lighting, new toilet. Now that's good to go. Aside from that, all we really needed to do was a coat of paint. There were some ugly orange paints in here. We needed a fresh coat on that, make it more modern, more appealing to renters. Also help with the refi. Fresh coat of paint doesn't hurt.
Unit 2, this was the biggest one. So we actually did a major layout change with this one. So as you see, when you walk through that main door, you've got the first door on the right there. That was originally actually the kitchen. So it was kind of tucked away. It was right in the corner of the property. And then next to that was the bathroom and then the living room. So because the plumbing's already there, and because we just saw a good opportunity to basically switch those two, so we now have the bathroom at the front, Then the kitchen, which we then removed that wall separating the living room and kitchen. You'll see a trend here, guys. We like open concept. We wanted to get rid of that. We're gonna get top dollar for that unit because of the open concept layout. So other things we did there, we're talking floors, trims, kitchen, bath, and we actually added in-suite laundry to this unit as well. This is gonna be our nicest unit at this property. So to add the laundry in, didn't cost us all that much, and it'll help get us more rent. And then unit 3, the 1-bedroom unit, that's the other one that's over the garage. So it's a bit of a smaller unit, but we utilized the space the best we could. Just the cosmetics, okay? We're talking kitchen, floors, paint, trim, and again, a brand new bathroom. It's turned out really well. It was a fairly simple one.
Yeah, these are the things that we're focused on this project. Again, really important to understand your renovation budgets and what your future upside is to make sure that your BRRRR strategy is going to work out. Now we're going to go through the numbers so we can break down what we're investing in this project and what we expect to get out of it. So Matt, we purchased this one for $873,000 earlier this year.
Yeah, so we got this at $873,000. Everything that we just went through with the rental is going to cost us right around $100,000. Our rent on this one total is going to be about $5,600. That is $1,900 for each 2-bedroom, $1,600 for the 1-bedroom, and then $200 for the garages. So we're like $100 each for the garage.
Absolutely. And just to be clear, we are able, these are big units. They're in a premium location, great neighborhood, extra parking, extra storage downtown. These are things that are a little bit of a premium. So we're able to get a little bit of a higher rent for this.
Yeah, so this is a premium rent, but like you said, premium property, so that's what you get. When you look at the expenses, so again, our expenses are our tax, our utilities, our insurance, and our vacancy in there as well. We're looking just under $1,200 at $1,186, leaving our net operating income of $44.14. Okay, our mortgage payment on this one, our debt service, is $25.79. So that's on a mortgage for 80% of the purchase price, leaving our cash flow monthly at over $1,800 a month. Now, all said and done with our down payment, our closing costs and carrying costs and stuff to get this place up to where it is today, we're going to be in this property for just about $292,000. So when we look at the cash flow, we're actually about a 7.5% cash on cash return on this, which is fantastic. But as you can see, obviously that's a ton of cash to be in a property for. Really depends where you're at with your investment, if you want the monthly cash flow, or if you want to be aggressive like we are right now and you want to be in a high growth stage. You don't want to be tied up for that much capital. You want to try and get as much back as you can. What it's going to allow you to do is just rinse and repeat. We're going to go out and we're going to do this again. So we're going to show you how it looks after a refi.
So we're looking at getting a refi about 1.1, Matt.
Yes, so we're looking at a 1.1 evaluation on a refinance. Now that is a super conservative number. That was our number that we had in mind when we purchased the property. With the way that we're seeing the market, with the additional rent that we're now able to get because of it, I would love to see this closer to 1.2, and that's definitely what we're going to be asking for when we go for it. But we'll run it at the 1.1 and show you guys how that looks.
And when we're going in for refis, guys, it's really important to know what your market comparables are, understanding what would cause a refinance to come in high or low. So some of the things that we really focus on are key features, what we're renting it out for, location, what comparable sales are, and then being able to justify those items like good layouts, good features.
Yeah, and a big thing too, like if you're really wanting to push the refinance as high as possible and you're planning on getting really premium rents for your property, go and get it rented out first. You're then able to use those actual rents to drive the refinance. If an appraiser comes through and sees the property and you're telling him that you're going to get $1,900 for the 2-bedroom unit, where his market rent may be closer to $1,700, they're going to take that. So if you have one in place and you've got tenants signed at the 19, they'll use your high rents and it's going to drive your price. So depending on your exact strategy, we like getting it rented out first, using that income to drive the price and to help qualify for the mortgage.
Absolutely. It helps you justify being able to push that refinance. And for the strategy that we're going through with this one, being able to grow, getting a bigger refinance back is going to help us move forward with some other projects. So for our rental rate, we already went through that, Matt, $5,600 a month.
Exactly. And again, guys, that's 19, 19, 16, and 200 for the garages. Expenses just the same. We went through that. The same net operating income. Our debt payments now,
that'll change.
Obviously, because we've got a bigger mortgage on the property. So we're at $3,250 now with our current mortgage.
And that's an 80-20.
Yes. Yeah, and that's, again, we're going up 80% loan to value on the majority of our stuff. Pull out as much as you can back. Banks will allow you to do it. So I highly advise. We're looking at $1,164 monthly cash flow still, which is awesome. And by being able to get all of our money back, instead of us being into it, for the 292, right? We're now in this for 117,000. That is way, way better for us.
We get about 160, 170K back. That allows us to go to redeploy and roll into other projects.
Let's just go do it again. And when you look at the cash on cash return for this one, we are now closing in on 12% cash on cash, which is honestly unreal. We're super happy with that. And the reality is, if we can actually get this at 1.2, we're gonna get another 80K back. We're gonna do this for $37,000. And it's only gonna affect our cash flow like 350 bucks a month. And again, like it always depends on where you're at with your investment, if you want the cash flow or if you're really looking to grow. We are looking to grow. We'll go out and do this all day. So I mean, as long as we're in the green on the cash flow, give us our money back. Let's go do it again.
Absolutely, 100%. And these are the types of things that we're running through before we even purchase the properties. We're going into these scenarios after we've checked out the home and it has the profile that we want. We're going into this and going into offers knowing exactly what our numbers are, so we know what we can offer and we know what to expect once the project's actually completed. In order to get that information, you need to be a little bit more experienced. You need to make sure you're viewing lots of options and confirming your numbers with local experts. That's how we know we're going to be able to get the rents. That's how we know we're going to be able to get the refi. That's also ultimately how we know what type of return we're going to get, and ultimately how we're going to be able to refi out. This allows us to plan for the next steps for future projects and other things that we're going to be working on right here in Ontario. So this is what the refi looks like. It comes back at the 1.1. We're going to be pushing for the 1.2, get some extra equity back, be able to roll it into another project and keep this train rolling. Awesome, guys. Now we've gone through why we got this project, what we're doing to BRRRR it, as well as the numbers and what it's going to look like when it's all done. And BRRRR, baby, the winter is coming. It is cold, but the deals are hot. Matt, myself, and the rest of our team, we are hunting deals all over the Kitchener-Waterloo area. So if you have questions about what we're doing with this one, other projects we're working on, or how to find other deals, get in touch with us. All of our social links are going to be in the description below, so if you want to follow along from the ride, you can check them out there, or you can contact us on our website. Again, link in the description. We're looking to connect with other individuals that are interested in the Kitchener-Waterloo real estate market, and we are an open book. We are happy to share what we're working on. So go check out the links, support the Canadian Real Estate channel, and thanks for watching today, guys.